Good morning and welcome. It's that time. Yeah, once again, the Patriot Radio News Hour live on this Thursday. What a great day to be alive. Of course, let's face it, being alive beats the alternative. I'm Joe Jaquint, CEO of the Patriot Trading Group. Our toll-free number, 800-951-0592. The website at allamericangold.com. Make sure you're out there every day. Keep yourself in the know. Keep you all comfortably disturbed out there. And, you know, it's a really interesting world, isn't it? I never know what I'm going to find next when I wake up in the morning. It's like a surprise. You know, used to be for a long time. I knew what to expect. I mean, you know, same boring thing. It's never boring anymore. Big news out of the White House this morning. Apparently, the negotiations with the Chinese are not going very well. And the Trump administration now saying they're going to hit China with a 25% tariff on $200 billion worth of products. Now, we knew the $200 billion number. That's been around for a while. But that was going to be a 10% tariff, now going to 25%. We'll have to talk about that. We did have really not a lot of economic data out today, but there's a bunch of things happening overseas that we need to pay attention to. Another intervention again yesterday in the bond market by the Bank of Japan. We'll keep our eyes on that. Another bankruptcy. One of my favorite stores is going out of business. Well, I don't know if they're going out of business. They're shutting all their stores. Brookstone closing all of their stores. They announced that today, saying no one's at the mall. You know, which I don't. You know, I get it. I don't go to the mall. Not that I go to the mall a lot in my day, but I don't remember the last time I went to the mall. And so anyway, another 100 empty mall locations for everybody out there. You know, and as I was telling you, you know, our oldest son's getting ready to leave for college, and I'm not going to lie to you. You know, me and my wife, we're having a hard time with it. You know, it's I don't know, it's sad. I'm going to be lonely. You know, I don't know. It's just, but it's the way, you know, way of life. And granted, it's so different from when I was growing up. I'm pretty positive my parents couldn't wait for me to leave. And the feeling was pretty mutual. But you know, it's a different time that we live in, and so we're trying to do a bunch of stuff, you know, with them, because you know they're you know, especially when they can drive, the 16, 17, 18, they don't want to spend any time with you, right? They want to, you know, do their own thing, be with their friends, and so we're doing family dinners and game night, and last night we went to escape room. I don't know if you've heard of, you know, the room where you don't really get locked in there, but you go into this room and you got to solve all these clues and try to escape within an hour. You get an hour, and the guy told us, well, you know, have you ever done it before? We're like, no. And he's like, well, you should probably do the easiest one. We didn't. Not that we didn't do the hardest one, but we did the Hangover. It was called, you know, the Hangover movies. It was kind of a play on that, and you know, we like really dumb comedy where you really don't have to think about it at all. I use all of my brain power here at work, and I have none left, so dumb comedies relate to me. But nobody, they had told us that we were in there. It was 7:30 was our escape room time. They told us nobody had made it out that day. Nobody had solved any of the puzzles that day. 56 minutes and 28 seconds it took us, and we actually got out of the escape room. We were the first people of the day to do it. So I'm pretty proud of myself. I'm not going to lie to you. I was pretty awesome in there, and we were able to find you had to find a ring, a car keys, and airline tickets, and all that stuff. But we did these. Here's my point. It was a lot of fun. So if you're looking for something to do, I was surprised. I didn't think it was going to be that fun, but we did. We had a good time. We were the only ones in there. You could have had more people in there, but if you sign up, usually most people want to just do it with their little group. So it was just the four of us, and it was fun. We did it. It was near our house, and we had a nice time. Yeah. So I wanted to share that with you. If you're looking for something to do, try the escape room. It is funny. Here's the funny thing, though. They hear everything. So they hear everything you say. They're watching all of that stuff. So if you're one of those families that's going to yell and scream at each other, they're going to hear it. So I thought for sure there's going to be a lot of yelling in our group, but we actually we did pretty well. We did pretty well, and they help you. You know, I'll say this: because there's like a monitor where the countdown clock is, and then every once in a while they'll give you a clue, because they'll notice that you're stuck, and they'll give you a clue to help you. And without that, there's no way we wouldn't have gotten out. But they do that for everybody. So if you're looking for something fun that may or may not cause family either coming together or being torn apart, try the escape room. We did the Hangover one. They got a bunch of different ones, but I think we'll do it again sometime in the future. We'll go for the hardest one the next time and see how we do. When we get back, we're going to talk about what happened at the Japanese bond auction and what's up with all these tariffs. That and much more next. 800-951-0592. That is our toll-free number. Yesterday, the Bank of Japan. So, as we know, right, all of the governments of the world, they're out there issuing debt, and they have their treasury auctions. And of course, in Japan, we know that they're the largest buyer ever of their own debt, and they own pretty much most of their own stock market, and it's really kind of gotten almost comical. But things are getting a little more interesting. Yesterday, they had an auction, a bond auction, and the Bank of Japan, normally how they do it is they have the auction, and they have all of the companies that are authorized to sell the bonds there, and they kind of go through this exercise of they pretend to buy them, and then after the auction they turn around and sell them back to the Bank of Japan. But so that way the Bank of Japan can say, well, we really technically didn't buy it, right? Because somehow that's better, right? It's like the Social Security trust fund, right? It's kind of the same thing. There's no money in it, right? There is no trust fund. It's just IOUs. Well, the Bank of Japan, they go through the same thing where they don't want to actually be the buyer of the official auction. But what they will do is after the auction's over, they'll turn around and buy them from whoever, one of the banks that is an authorized dealer for the bond. Yesterday, they had a problem. There was enough bidders, okay, so they had enough people, bidding to cover the debt. The problem was none of them wanted to accept the low rate. In other words, hey, we'll buy it, but the bribe, if you will, right? We want some interest, right? The Bank of Japan doesn't like to pay any interest, right? So they wanted interest, and the bank was going to be forced to make a bunch of margin calls. Because you got to remember, when people buy treasuries, and I know a lot of you are like, it's so complicated, I don't understand it. No, you do. It's not that complicated. They got to buy them, and then they got to hedge, everybody, all these banks. Because you're talking about billions and billions of dollars, right? It's not like they're coming in there and buying 5 shares of Facebook or something like this. Stuff, you got to hedge it. And essentially what was happening was they were like, listen, we don't want to accept this rate. We'll buy it. We'll pretend to buy it. But you need to pay us a higher rate because when we go to hedge it and turn around and sell it back to the Bank of Japan, right, we want to make some money. So the Bank of Japan was looking at this and saying, oh my, if we fill the orders at these higher rates, and by the way, the higher rates, it didn't even get up to 0.2%. They were about 1.35. Point 135, right? It was 0.1%. 0.135. That they were going to be forced to make a bunch of margin calls on a bunch of the other bonds that people had bought. And so the central bank actually had to step in to the actual auction itself to buy the bonds to ensure that margin calls didn't have to be made at their debt auction. So just something, one more thing to put into your mind. If you go out to allamericangold.com this morning, the lead article, could it be Japan that causes the bow to break? And remember, here's the biggest issue that we have, right? We want things to go well. I would love for Wall Street to be at 25,000, and I could feel and I want to feel good about it. It's at 25,000, but I know I don't feel good about it because we've mispriced debt, and the central banks have done it on purpose. And of course, what are stocks? They're debt instruments, and you think about all the things that they want you to have your money in. Right? What do they want you to do? First of all, they want all your money in the bank. Then they want you to have your 401ks, right? And they want you to buy stocks. They want you to do your day trading, your money market account, your annuities, right? Your IRAs, your money market, your 401ks, the annuities, your stocks, your bonds, you name it. CDs. I know I'm missing them, but you know what I'm talking about. All of those, without exception, these are debt instruments. And the central banks have mispriced the debt. And how have they mispriced it? Are they trying to make the debt appear more or less attractive? And what I mean by that is, are they mispricing it by saying, well, this is super, super risky? Nope. Right? Because look at the Bank of Japan. They can't afford to pay a tenth and a half of a percent in interest. They can't have that. That would cause margin calls, right? And who's going to get the margin call? Right? Well, in Japan, we know exactly who it's going to be, right? Could you imagine them having to get a margin call on themselves? That would be that would be fantastic. And you sit there and you start thinking about, right, they're making it appear more attractive, if you will, than it should be. Because what is a debt instrument, right? It's risk. Right? You're making an assumption on how big is the risk. And you're sitting there and you're thinking about a country like Japan that's got more, their central bank holds more debt than their entire GDP of the nation, right? And they're trying to act like there's no risk, which just means all of the debt instruments out there are all overpriced. And this is kind of what one of the big problems that the central bank is having, because right now, right, we got this strong dollar. It's killing it's killing everybody out there. You can't have the strong dollar. The debt is exploding here, right? The Treasury now can't even go 90 days anymore without having to come out and say we need another debt instrument to try to take care of all of the issuance that we need to deal with. And then this morning, of course, we got the trade war. And the Chinese have been very, and we knew this was going to be the tough one, right? Because they got nothing to lose. And they're out there, and today the president announced that, hey, you know what, we're going to do $200 billion, 25%, and they dusted off Wilbur Ross, and they had him out on TV this morning. By the way, Wilbur Ross is our commerce secretary, so he's the guy that's in charge of trade, if you will. And he's downplaying the effects of this. And he said on TV, now remember, this is the same guy that, remember the first $50 billion. I don't know if you remember. That was the steel and aluminum stuff. And he came out on TV, and he was holding the can of Campbell's soup and was saying, hey, it only increases the cost of a Campbell's soup can by 2 pennies, and it's not a big deal. And, of course, instead about Coke and Pepsi, of course, all of them what? Wilbur Ross doesn't know what he's talking about. And all of them, matter of fact, Coke, Pepsi, Campbell, they all announced price increases to the consumer after releasing earnings last week. But here's what he said this morning. If these tariffs cut into margins, now I don't know where the if is, right? Obviously it will. Companies are just going to pass that on, and that means raising prices, and it means higher prices for all sorts of stuff for the American people and the American consumer, and that's going to mean inflation, right? This was the question posed to Wilbur Ross. So do you worry that all of this, well, good intended, okay, so she acknowledges, hey, it's good intended, is going to impact the economy negatively and wipe away what you've been able to achieve from the tax cuts and the rolling back of regulation? So that was the question posed to Wilbur Ross on the $200 billion being hit with a 25% tariff, which essentially, that's where you get the $50 billion, right? So think about this, right? Apple's got a phone. It's $1,000. I mean, it's made in China. I guess, does that phone now become $1,250? I mean, I think it does. I don't know, but, I'm just, doing some math here. Here was his response. Well, let's put it into arithmetic perspective. So he's pulling a double, right? Because what do I always say? Let's do math. I can do math. Wilbur Ross says, hey, listen, I can do math. 25% on $200 billion, if it comes to pass, is $50 billion a year on an $18 trillion economy, which I thought was interesting. The economy is only $18 trillion. That's a lot less than what they've been telling us. They're telling us the economy is $20 trillion. So maybe you just made a mistake, or maybe it really is only $18 trillion, but they padded a couple trillion. Let's throw a couple trillion of seasonal adjustments on there. Nobody will know. That'd be my guess. But anyway, that's only 0.3%. It's not something that's going to be cataclysmic, he said. And I guess he's right if you view it that way. I guess here's the issue. If you have to buy any of these products that come from China, which, let's face it, we buy a lot of them, you're going to be hit with an oversized amount of the issue. So it's going to be interesting. I thought that was an interesting response to how Wilbur Ross is looking at companies. They're going to have to pay more. They're going to raise the price on the American people, and they're just going to have to deal with it because it's not that big of a deal. There you go. Immediately following that, China has announced that they are going to respond. But before they do, I want to bring up one thing because we haven't talked about it in a while. So I started thinking about this, and I was like, China's devalued. Matter of fact, China's currency hit a new low today. Not shockingly, right? What did they do immediately? Now they've lowered the value of their currency. But one of the things I was wondering was, I wonder how their oil contracts are doing, because that's in renminbi. I wonder if a lot of the people out there, a lot of the countries and the players out there are backing away, right? Logically, in my mind anyway, I'm sitting there, I'm thinking about it, I'm like, if we've got the upper hand here, I would think that their oil future contracts, the volume would probably be off quite a bit. I'm going to tell you what's happening there when we return.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles, a national volunteer organization founded by Phyllis Schlafly and continuing to uphold her legacy by opposing radical feminism and representing a traditional conservative perspective in our nation's capital. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
President Ronald Reagan found out in 1986 that granting amnesty to illegal immigrants only serves to incentivize more illegal immigration. It does nothing to solve the problem. After he publicly denounced the amnesty bill in June, President Trump was quickly courted by leadership with a new compromise bill that included funding of a border wall to the tune of $25 billion. But funding a wall is not the same as building a wall. Liberals run to the courts immediately to block almost anything Trump does on immigration. Before the ink could dry on such a bill, even if it were to pass the Senate intact, liberals would file suit to obtain injunctions blocking the construction of a wall. They would sue in predictively activist jurisdictions such as San Francisco and Hawaii, where multiple injunctions have already been issued to block Trump's executive orders that were tame compared with a border wall. Congress has the authority to strip federal courts of jurisdiction and has done so on many occasions. As explained by Phyllis Schlafly in her classic book, The Supremacists, former Senate Majority Leader Tom Daschle, a Democrat, once stripped jurisdiction from federal courts over challenges to brush clearing in his home state. Before President Trump signs any immigration bill, he should insist on broad jurisdiction stripping provisions. If federal courts are allowed to wield authority over the construction of a border wall, then multiple federal judges, appointed by Clinton or Obama, will surely enjoin its construction. Reasons given will range from environmentalism to non-existent prejudices. Fortunately, few Republicans who want to win re-election will cross President Trump at this point, after one tweet sank never-Trumper Congressman Mark Sanford in his own primary in South Carolina. There is no reason for Trump to cave into Republicans at this point. Lame duck House Speaker Paul Ryan, who's stepping down at the age of only 48 rather than fight for the Trump agenda, has long given priority to the agenda of the pro-illegal immigration lobbyists. But their goals are not those of the American people who elected Trump as president.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Can activist judges be stopped, or will they continue to overturn laws with no regard for the people? Connect with us at phyllisschlafly.com to hear alerts on rulings made by never-elected supremacist judges and to share your viewpoint. That's phyllisschlafly.com. Thanks for listening, and join us again for the Phyllis Schlafly Report.
800-951-0592. I'm confused. Is it a big deal? Or is it not a big deal, right? Wilbur Ross came out on TV and said, it's not a big deal. It's only, 0.3% on an $18 trillion economy. And just Didn't know the economy shrunk that much, that it was down to 18 trillion, but neither here nor there. If it wasn't that big of a deal, why haven't we done it before? Right? Why I don't know. I obviously somebody's not being truthful, right? Either all of the people on the idiot box, and it could be them, right? Because let's face it, right? These multinational companies, which is what the Dow is, right? They want to make as much money as possible, so maybe they've overstated how important it is. Or Wilbur Ross just came out and said, we don't care. It's going to be a little bit, you pay a little more, but it's not, on the grand scheme of things, it's not that big of a deal. But here it is. Here's the problem with that logic, and why I think Wilbur Ross may be the one that's not right. If you've got to start paying more for, and let's just say, and I don't know exactly how many products you buy are going to be affected, but essentially, when we get to this $200 billion after the $50 billion, we're about at half of all imports from China now. We're closing in on the $250 billion would put us pretty close to half of everything that comes from China. So I would venture to say most of that is in the supply chain somewhere. Right? Because remember, we're not just talking about finished goods, right? We're talking about raw materials, right? We're talking about not just steel and copper and all the other different types of industrial commodities that go into, whether it be tin cans or automobiles or some type of a component that goes into aircraft, or maybe it goes into making, cell phones and all of those other things, that is going to have an impact on how much we pay for stuff. And again, remember, we have been saying this here. I know Eric was saying it before I ever started working here. Right? Number one, we're going to want it back. Right? We're at that point now. And number two, everything's got to get a lot more expensive. And this is kind of what we're talking about. I guess here's the problem for Wilbur Ross and his argument. If you've got to pay more for, and let's just say that it only makes up, 10%, 5% of what you buy in a month. Okay, so in other words, 5% of the products you buy are going to be affected by these tariffs. And I'm thinking bottles of shampoo, razor blades, deodorant, right? I'm almost, I don't know where all of these components come from, but I got a pretty good guess. A bunch of it probably comes from China, somehow, some way, right? And you start going across things, cardboard, all that stuff. If you've got to start paying more of your income for those items, it just means you got less for other items. Which, of course, in turn means what, right? That the slowdown of the economy quickens, and you have this issue. But neither here nor there. I don't know what's going to happen. I'm still, every day I'm fascinated, right? But one of the things as we're watching, and we've been following the Chinese currency, right? We've been following the renminbi, and we know that it's at multi-year lows. Today it hit another low again, getting ready to breach 7. It got down. It was got all the way down almost to 6 renminbis to the dollar. Now we're at 6.84, 6.85, something like that, almost 7 to the dollar, which is a huge move. And a lot of people speculating that it could breach 7 and start heading back up to 8. So I wanted to see about their oil contract, right? Because remember, we've made a big deal. They became a reserve currency, right? We gave them that honor. I bet we regret that now, don't we? And one of the first things that they've done as far as increasing the use of their currency in the world, in other words, here's our way of starting to eat into the dominance of the U.S. dollar. And they started with the oil's futures contract. And I've told you guys before, right? Oil is the largest of all the commodities. In other words, it's more traded than any other commodity. It's the biggest thing. So they didn't go after the smallest thing first, right? They went after the biggest thing. And my assumption was simple. Hey, China's devaluing their currency. I bet you that's making a bunch of people nervous. And I would imagine that it would be affecting the amount of oil contracts that they're selling. So I went and I looked it up, and of course I didn't do this. Someone did the offer or the research for me. Rory Hall was his name. He is the guy that did the research on what the petrodollar and of course the Chinese dollar is doing to oil futures contracts. So here's what he found out. The oil contracts priced in yuan or renminbi yuan, whatever one you want to use, is growing in such a way that by the end of the year, the contract will present a real challenge to the petrodollar. China's newly launched crude oil futures contract on the Shanghai Exchange saw its trading volume surge to record highs in June and then again in July. So as this whole thing is going on, the contracts they're actually gaining momentum. They said the volume for the front month contract. Now the front month contract that they're talking about is a September delivery contract. It said that it recorded 275,000 lots last Friday, the highest total since it began trading on March 26th. 7 times the volume of the first day of trading. The first day it opened in March, they did 40,000. Last Friday, 275,000. I'll tell you where that puts them when we return. 800-951-0592, talking about, where is the money going to go? Right? And when we know the amount of dollars needed to buy this debt, and we keep talking about who's going to buy the debt, and one of the things that the United States has always had is the fact that in order for the rest of the world to buy the commodities that they need, they had to hold dollars. One of the things, you look at Russia, right? Russia dumped, 90%, 85% of all their treasuries. But they kept a little bit because obviously there's certain things that they still have to use dollars for, right? Not all. You can't, right? As it sits right now, you can't buy everything without owning some dollars. But looking at China's oil contracts, and of course my thinking is pretty simple, right? This is just the beginning. And I really thought, okay, well, volumes are probably slowing down. People are a little nervous, and they're pulling away from the Chinese contracts and buying it, just buy dollar contracts, right? I mean, that's what I thought was happening. Apparently, the exact opposite is happening. Not only did they hit a record trading volume, just so you know, every lot is 1,000 barrels of oil. Now, you have a buy lot and a sell lot. So if you take that 275,000 contracts, you cut it in half because half of them were buyers, the other half was the seller. That was still 137 million barrels of crude oil traded on paper in a single day. And you think, it's incredible, the amount. Of course, the world doesn't produce, I don't know exactly how much, but I don't even know if they produce 137. I know, we do, 10, 11 million barrels a day. The Russians do about the same. The Saudis do about the same. That's 30 million. I'm positive. The world doesn't even produce that many barrels in a day. But that just shows you the amount of interest that is in there. According to Platts, and Platts tracks volume, they said that the trading volumes have been rising steadily since the launch on March 26th. They said the daily volume was 69,000 lots in April, 170,000 lots in May, and while they haven't totaled the June ones yet, they're saying that it looks like another serious jump on top of the May numbers has occurred in June. And while the market is still in the early stages, right, it's only been open 4 months. It already appears that it will be the second largest exchange for oil by the end of the summer. Of course, the only ones bigger, Brent and WTI. The trading volume that happens there is about 2.6 million contracts. So China hit a record of 100 and what did we say? Or 275,000 lots. 2.6 is what we do in Brent and WTI, but you can see how quickly it's adding up. And eventually, right? So where are the contracts going to come out of? Right? They're going to come out of the Brent. They're going to come out of the WTI. And as we watch all of these things trade and look at the relationship here, it doesn't appear that the rest of the world is seemingly too concerned about China and their currency. And I just thought that was something, I saw it, and I was thinking that the opposite was going to be, and this just kind of tells you the situation that we're in. Right? I think a lot of people out there are getting ready to do exactly what they feel that they're going to need to do to protect themselves. Listen, they're going to do what's in their country's best interest. Right? That just makes sense. And you start looking at the United States and you start seeing, every 90 days, 60 days, 30 days, the Treasury comes out and makes new announcements about more bond sales, and we got to add new securities, and we got to add to the volume of existing securities. And then you start looking at all the forecasts, right? What did we have just this in the last couple of weeks? We had the CBO come out with an update. Oh, yeah, the numbers we told you 3 months ago? Yeah, forget about those. Right? Throw those out the window. That was way too low. They're going to be a lot higher. You had Social Security Trust Fund. Right? It wasn't supposed to go, quote, unquote, negative until 2022. 3 months ago, not even, about 6 weeks ago, they came out and said, did we say 2022? You know what? We meant right now. Right? Going to go negative right now. 2018. Again, there's no trust fund to begin with, so it's just added to the debt either way. Then we had the Office of Management and Budget come out and say the forecast that we issued 90 days ago, throw that out. Right? And they're all throwing them out and doing what? Are they saying that it's going to be less? No, they're all coming out and saying, hey, listen, we need even more debt. Which is obviously continuing to give a lot of other countries at least the thought of, we need to diversify a little bit. And, here at home we talk about why do you own gold, why do you own silver, right? It's really simple. You own it to protect yourself against the dollar. Right? We don't want it to go down. But, just in case it does, we need to be ready. Patriot Radio News Hour, final segment coming up. 800-951-0592. Take the time, put them away. I'm going to tell you right now, I don't have a special that I'm going to do on the air, but what I'm going to tell you is call me. I've got a few things. They're right here, live in stock, and I'll give you a great deal. You'll save big time over our competitors. Give us a call. Wait for me to get off the air. And that way, because Arlene doesn't even know what I've got back there, wait for me to get off the air, and I'll help you. 800-951-0592. China has issued a response now in light of the news from President Trump this morning. China is fully prepared, and we will have to retaliate to defend the nation's dignity and the interest of the Chinese people, defend free trade and the multilateral system, and defend the common interest of all countries. The statement issued by the Chinese Minister of Commerce: the carrot and the stick tactic won't work. That was their official response. In the past 6 months, China has allowed its currency to depreciate. It's depreciated by, now today, by 9%. If you're going to apply a 10% tariff, here's the problem. Of course, now the tariff's now 25%. So, I don't know, I guess we raised the guy. I guess, you know what, the president said, hey, listen, if we're going to go 10 and then you just depreciated your currency essentially 10, well, that's no good. So now he's looking at 25. It's going to be interesting that the Chinese ministry saying that they're going to retaliate. I don't know how. I don't know what. We'll have to wait and see. But as it sits right now, there are no scheduled talks. So a few days ago, we thought there was going to be. Apparently, there are no scheduled talks between China and the United States as it sits right now. The stock market is, actually, the stock market's come back a little bit. The NASDAQ is up. Apple's hit $1 trillion. And here's what was so funny. In Apple's earnings, they were okay, but they actually sold less iPhones. But the price, what they did really well is they sold a lot of expensive ones. So actually, iPhone volume's down. But the fact of the matter is, at $1,000 a pop, and I guess I don't know if they're going to be part of the tariff or not. But that one could be getting more expensive. Apple hits $1 trillion in market cap. They are the very first company to hit it. Their stock hit $207.05 shares, 5 cents a share. That allowed it to get to the trillion number. Apple, by the way, in case you wanted to know, has 4,829,926,000 shares outstanding. Just in case you want, I did not realize that they had almost 5 billion shares outstanding. So there you go. Apple's hit $1 trillion. Apparently, people aren't worried that they're going to have to pay a little more for their iPhone. Patriot Radio News Hour. We got Fake News Friday tomorrow. Don't miss it.